What's up, guys? It's August 12th, 2024. Got a sideways day in the markets today. Yeah, we're in the range bound part of the market cycle. Breakout started May 3rd, channeled, reversed, and now we are in all these gaps are closed. Now we have these bear gaps open. No bull gaps, no bear gaps, so we're going range bound under the EMA, bouncing off the 45. A lot of overlap on the bull trend. They made a new high in reverse, so bulls went to close the gap made on August 2nd. The August 2nd sell-off from here to here. Bulls are trying to close it. They do kind of close it, but we get a bull bar and it reverses here. Leg one, pull back leg two, and we go sideways. 45-minute daily. Small range day after coming off a lot of range expansion, so the range could be contracting after we've had some pretty volatile days. I mean, I remember taking 3 micros and I sat through a $350 pullback. And that's not to say I had yeah, I'll show you. I bought, no, that's not the price action. It was, yeah, I'm pretty sure it was this candle. I bought bar 40, no, it was in the morning. It was in the morning recently. It might have been here. Let me see. This candle's high. 52. No. Okay, well, what I'm trying to get at is the volatility has been high and the drawdowns are deep. It might have been this candle. I bought, no, that's 635. It was this candle, bar 12. I remember now. I bought bar 11, the close, and sat through from the high of 12 to the low of 13 was a $350 pullback. That's not that bad to sit through. 22-point pullback. So, yeah, volatility. We'll see what happens tomorrow if we bounce off the 45 and tag the daily, or do bears get another leg lower? Or we'll see when that happens. It doesn't have to be tomorrow. Give me 2 seconds. Yeah, so let's get into it. Yesterday we've been in a bull channel, weak bull channel, lots of overlap. It's bears are making money in the bull channel, so it's not the strongest bull channel we've been in since the 8th. It looks like, yeah, since the 8th we've been in a bull channel. It's the 12th today. If I could bring your attention to the price action right here, I'm trying to do this as the title says, bar by bar. So it's yeah, just bear with me. We're gonna go through it. I'm cracking my back. Gap up. Bar one, good for the bulls, bad for the bears. The doji bar at range highs. So it's not even that good for the bulls. They want to see it close above 49. Bar two, strong bear bar. Bar three is follow through. We gapped up and reversed lower. Is this today? Yeah. Gap up, reverse lower. 3 bars are taking out all these bars from yesterday's price action. Bar 4 is good follow through. So right now we have 1 bull bar and 3 strong bear bars. Trading above the higher time frame EMA. Bar 4, bar 5 is a rally. It's a pullback. Bar 6, it's a version of a leg 2. Leg 1, pullback leg 2. Bar 7's pretty bad for the bears. We're trading above support. We've been in a bull channel. We're somewhat at channel lows. Let's see. Can we project it? Yeah, so we're breaking below channel lows 50% of the time. It's going to reverse. Bar 7 looks like this could be that 50% of the time. Strong breakout above the EMA. Now we have a big down, big up. Market could be range bound. Bar 9 is good follow through. Bar 10, good for the bulls. Not the best, but it's good for the bulls. Weak close. It's a range bar. Bar 11 is better. Still has a tail. Would be better to see a strong close above bar 1 and 2. Bar 12 is a pullback. So now I'm counting leg 1, opposite bar, leg 2. 13 is a strong close, but look, we're not closing above bar 12's high, so this could start to become a trap. We're starting to go more sideways. 13 is more sideways than up, whereas did I say this was 7? Bar 8 and 9 have less overlap between, if you're trying to compare with a trend bar versus a range bar. Bars 8 and 9 have little overlap. Bars 11, 12, and 13 have a lot of overlap. Bar 14 closing at new high of the day above yesterday's high, but it's a tail. It has it's a range bar. It has about equal tail, equal body. Bar 15 could become a sell signal bar. 3 pushes up. Bears that are selling down here are going to start shorting highs. It's a big down, big up, so we could be range bound. So there was a gap here. It got closed. And there was a gap here that got closed. So when gaps get closed, we have to think range bound price action over trending price action. Bulls are putting in a gap here. Bulls put another gap in here. And this is showing trap traders, and it's showing strength. Bulls have strength. Bears are not getting out at break even. The market's traveling higher. 18, another good close. Starting to have a climactic price action. Wedge, 3 pushes, going more sideways. 19, another breakout. If you bought this for a breakout, I think you have to be pretty quick to hit out, because we've had a leg 1, opposite bar leg 2, opposite bar leg 3, opposite bar leg 4. Bar 20, bad follow through. It doesn't trade higher than bar 19. Bar 20. Bar 20 doesn't trade higher than bar 19, so bulls that stop order bulls buying 1 tick above never get filled. Market order bulls are trapped. The traders that bought the close of this with the market order are trapped into a losing position. They're going to buy more at 21 and get out at the original entry or 50%. 21 does that, creating a double top. It's a lower high for the bears. 21 bad for the bulls. Bears are starting a continuation. 21 has a bull body, and I meant to say 22. Excuse me. 22 is a range bar, bear body, huge bear back, huge bar. Look where it's closing though. It's a big bar. It looks like a trend bar. Closing on its low, small tail, but we're bouncing off bar 7. We've had bear gaps close. We've had bull gaps close. So now what are we thinking? 24 is a bull bar. So now bears have a gap. So here, are bulls going to close the gap, or are bears going to continue with the breakout? I didn't take this trade, but I actually was betting on I'm only focused on breakouts right now. I was just like, I took it in my head, and I was betting that bulls can close the gap, so they would get to the 22 low before bears make 1R. Bulls will make 1R. And if bulls are making 1R off a bear candle, then we're in range. This is range bound price action. 23 could be leg 2 for the bears, leg 1, pull back leg 2. 24, bad follow through for the bears, good for the bulls buying lows, range bound play. 27 is also good for the bulls buying lows, bad for the bears. We have a lower high, we're at the bottom of the bull channel. 26, if you're short, I think you got to get out here, because now bulls could be going for the EMA, and they get that with 28, or excuse me, 27, 28, 29, 30. 30 reaches the low of 22, so the gap is closed, and now bulls get a gap with 28 and 30. So you guys see something here with ranges, gaps are closing. So rangers are more forgiving to traders trading extremes, but if you trade a big position, you won't be able to scale in at highs. Bulls that bought the high of 19 can buy the low here, and they'll get out at break even or for a few points here. Bulls that see this as a buy low sell high play have orders set here. Bad breakout bar. It's a bear flag with a bull breakout. That makes bar 6 and 7 a bad breakout bar. Bad breakout signal, and those can get retested, and it does. And it goes for 2 legs higher. Leg 1, pull back leg 2, opposite bar, start leg 3. Leg 1, pull back leg 2, pull back. Pullbacks going on and on. I was caught long in here. You have to start to ask yourself, is this a breakout or is it sideways price action? Gaps are closing. There's no gap staying open. The market's going sideways at highs. This gap, the ice cream man is outside. I can hear him. Bulls want to see Sean closes above 23's high, and they don't. So there's still selling pressure. Buy low, sell high. Bears get leg 1, pull back leg 2. That's why I bought 37. I saw this as long, pull back leg 2, looking for. So I'm talking about a failed leg 1, pull back leg 2, like that for the bears. 39, more sideways price action, lots of overlap, 40 overlap, no, not strong closes. Here, we can see bulls are not getting follow through. A couple of bulls are getting trapped at highs with 40. 41 is bad follow through. 42, another sell vacuum. Once again, the gap has been closed. You guys see how this is working? Why I think gaps are pretty important to understand. At least that's why that's why I've been harping on them, because I'm like, wait a minute. There's more to these gaps, and there's more plays than I'm sure there are way more ways to read and play this. This is just we're just practicing how to get better context. Are we ranging or are we breaking out? Right now, gaps are getting close, so we're range bound. Bar 30, it's a bull bar at lows, so it's buy low, sell high. 45 is follow through. 46 test the EMA, and we start to go sideways again. Bad follow through above the EMA. So the EMA is acting as resistance. The market's contracting. We're getting higher lows and lower highs. It's breakout mode. 48, bear leg lower, and look, the gap right here gets tested. 48 sells off, sells well past it, so that's a weak gap. That's not good. 49, strong, good looking bar for the bulls, but what's the follow through looking like? Bad for the bears. It's a sell. 51's follow through. 52, more follow through. Gaps are getting smaller, so this trend is the range is getting the range compression. It's getting tighter. A lot more overlaps. This is a negative gap. I'm just starting to understand what negative gap mean. Excuse me. I'm just starting to understand what negative gaps mean, so I'm not going to talk too much about that. A negative gap is right here, though. This gap, this wick went past this gap, so there's overlap. So it's a weak bear channel. It's a deep pullback on a different time frame. See that? That's the, and then it goes like this all the way like that. No, hold on. Let me delete that. Look at the tails. So here's one tail to the next tail, next tail, next tail, next tail. So you guys see something here? Like 1, pull back like 2, pull back like 3. Let's go to the 1 minute chart real quick. What bar is that? 54. So we're on 53. Okay. See? Look. 1, boom, 2, boom, boom. Climactic leg. That's a wedge bottom on the 1 minute. Where are we? We were on bar 53. So, bam. That's your wedge bottom into support. Market goes more sideways for the rest of the day. Tight trading range. I did get caught buying this, hoping for a test here. I reversed out. Yeah, it is what it is. I am red on the day, but I'm a comfortable red. I'm a red that, like, you know, I'm able to. I accepted it a little bit quicker today. This trade was actually what made me lose a little bit more, because it just reversed right away. I had no chance to get out, break even. I didn't buy lower. I just was looking for a retest. It never happened, so I had to hit out a little bit lower than I would have liked. Doesn't matter. I'm just gonna keep focusing, and it will work. Here's gaps on range days. You know, all the gaps that were open, closed, and we went so tight they couldn't even do nothing at the end of the day. Be interesting to see what happens if we go more range bound. We have had a big down, and now we had a big up on the daily, so that is also range bound price action. Hope you guys are doing good. Hope you guys have been studying. Hope you had a good weekend. I appreciate all the comments and the questions. Keep them coming. Let me know if you want to invite to the Discord. It's pretty fun talking to you guys. A lot of you have been messaging me some really good questions, testing my knowledge. So I appreciate your help. Appreciate your support and your taking the time to watch these videos. Kenny, let me know if gaps are making sense. If you made it this far, I think gaps are important. You know, people trade without gaps all the time, but if you're trading price action, it's pretty important to understand what a gap is. Hope you guys had a good one. I appreciate your support. Thank you. I'll talk to you tomorrow. Goodbye.